Deal.
Deal. All right. Well, it's 3:33, so I am going to go ahead and get us started as people trickle in. So I'm going to switch. Lucas, go ahead and put yourself on mute, if you would. Okay. All right. Okay. I'm going to get us started in the interest of time because I know we have a lot of material to cover. Again, I'm Julie Blaylock. I'm the president of the Farragut West Knox Chamber of Commerce. So thank you all for joining us. I see some members in here and then some other folks that I haven't seen in a minute. So it's good to have you all. Reminder of how to do this, even though we should all be experts by now. But go ahead and put yourself on mute at this time so that you don't interfere with audio because it can cause those echoes that are makes it difficult for us to hear the speakers. We will be using the chat today. So feel free to introduce yourself, drop your business and your contact info in the chat. I'd be happy to send a list of contacts to those that would like them after this webinar. And as we go through the panel and go through our live questions, if you have questions or would like a little more clarification on something, please drop it in the chat. I will be monitoring it and I will feed that to the panelists as it's appropriate. I know that we probably have businesses who have some very, very specific situations going on, some very unique situations. We are going to do our best to get to everything we can, but just know that we're going to have to try to keep this at kind of that 5,000 foot view. But I've taken the questions that y'all have emailed me and I've worked them in to the best of my ability. And then of course, Justin Goodbread from Heritage Investors and David Kent, who is here, and then also Lucas Schaus, who is our banking representative. They will be more than happy for you to reach out to them individually if you'd like a little more guidance or a little more feedback. That's what they're here for. They are volunteering their time. We are not paying them, except in love and affection. And I hope that's enough, guys. All right. All right, so let's go ahead and get started. I want to do an introduction of the speakers. So each of you just tell us your name, tell us your role, your business, years of experience, and we'll get started. Justin, let's kick it off with you.
Sure, so I should be unmuted where everybody can hear me. Justin Goodbread, multiple credentials, certified financial planner, certified value growth advisor, and certified exit planner. I'm the CEO and founder of Heritage Investors and Heritage Business Advisors. I'm also editor-in-chief of our blog called Financially Simple. We have literally hours of education material on Financially Simple about the videos we've shared. Background is 20 years in the business, already started and sold 3 businesses. I've been an entrepreneur all my whole life. We currently engage hundreds of business owners nationally and helping them we try to grow, double their net worth every 3 to 5 years. That's what our company does. So whenever the PPP came out, because of some national accolades that I have on a national level, I was invited to sit with several think tanks that talk with the SBA. And so weekly I've been getting a lot of input and adding a lot of input to some of the details with the we originally had Families First deal, and then whenever the CARES Act came out, I'm one of the nerds who actually printed off the whole bill and read it line by line with a highlighter in my hand and started predicting some stuff 2 months ago, and it's coming true. So that's a little bit about me.
Awesome. Thank you, Justin. Really happy to have you here today. All right, Lucas, let's take it over to you, sir.
Sure. I've been in banking for, I guess, going on about 20 years now. Specialty right now is business banking. I've been doing that for about 10. So I've been kind of knee deep into the PPP and how that's going, the struggles and the hurdles of all that, along with kind of forward thinking the next 6-9 months of how that's going to kind of affect go forward economy when we start kind of unthawing what I call kind of this ice cube and we all start kind of going out into the city again.
Absolutely, and the Chamber has been praying for all of our bankers. We know you guys have been putting in a lot of overtime hours trying to get these loans rolled out, so thank you for the work you've been doing. for your community and your customers in that regard. Okay, David, let's wrap it up with you. Tell us about you.
Okay, thank you. So I'm David Kent, Director of Business Planning for Heritage Business Advisors. I work with Justin, of course. I work exclusively with small businesses, strategic business planning, value growth, basically spending a lot of time right now on PPP forgiveness, loan forgiveness, and helping people develop strategies to be able to navigate through all of this craziness that we find ourselves in right now. I've been in the corporate world for about 30 years. I hate to admit that, but been around a long time, seen a lot of things, specialized in business operations. I have a good understanding of corporate value metrics, and I help small businesses apply that to their business. So that's kind of a little brief about me.
Perfect. All right. Okay, guys, we're going to dive right in, and we're going to dive a little bit deep. The packet that the member attendees are going to receive has some extra questions, that are kind of an overview. I think most of us understand that the PPP loan, it is not free. It is not money that is just being given to you as a gift. It is a loan. But there is forgivability with it. However, how you go about getting that portion of the loan forgiven has some issues and some pitfalls. And Justin, you and David brought up in the packet that this is going to create some additional tax issues for business owners after the fact. We're going to try to get to that. First question that I'm going to pitch to all of you, and we're going to try to keep your answers around 2 minutes, which I know isn't a lot, but it'll keep us on track as best we can. Let's talk first about businesses that got denied funding. We had the question come from several people, as well as folks that were registering for this, about the issue of sole proprietors. Several of them were denied due to ineligible number of employees. However, these are still businesses that have a payroll. So can you speak to the issue of sole proprietors? Are they eligible? What's going on? Justin, let's go ahead and start with you.
Yeah, so the answer is yes, sole proprietors are eligible. The law clearly states that. I think it's in section 1102 of the actual act. The guidance originally came out that we could actually take on the underwriting position to apply for the loan, showing that we could take the total income. Then the SBA, I believe it was on about April the 14th, I think it was, came out and said that basically we're going to use the NOI, net operating income, I believe it's line 17 of Schedule C, as the position for the PPP calculation. In a nutshell, if you have sole proprietors who have employees, all the payroll still eligible, et cetera, all the rent, utilities, the same calculations that we have on forgiveness is there as well. If you have your sole prop person, though, that does not have employees, a little different calculation. In the short stick of it, you can basically count on about $7,500 times 2.5 to be your loan amount.
Okay, awesome. Thank you. Lucas, let's pitch it over to you. Have you run into anything with sole proprietors applying for the PPP loan? And do you have any advice there?
My best advice is to kind of go off what Justin said. Have your tax documents ready. We have had some people get approved that are sole proprietors that go through it. I can usually say that the best thing that I try to tell people, it's always fun to write everything off, but then when you get into situations like this where we're going off those numbers, you could be disappointed if you've written everything off and you can't show those numbers on your taxes. That's kind of what I've seen. I've seen sole proprietors get popped for $32,000 in PPP, and I've seen them get approved for $5,100 based off their numbers.
Okay. David, let's take it over to you. Can you add anything to that about sole proprietors? And especially if they got denied the first round, should they or can they reapply?
Yeah, so as far as the sole proprietors go, I mean, Obviously, there's a cap on how much they're able to claim. As Justin said, $7,500 basically for a month's period. It's a little over $15,000 for the 8-week period. Rent and utilities can be calculated into forgiveness, but that wasn't part of the original loan calculation. So that's what Justin was talking about, taking the pay of the sole proprietor times 2.5 to calculate. As far as being denied, generally speaking, if a sole proprietor or anyone has been denied the loan, it's probably because they have been suspended by a federal agency from participating for whatever reason. They could have defaulted on a SBA loan in the past. There are also some other felonious type of situations that might exclude someone from the loan. So hopefully that's not the case in any of these situations, but those are the common ones that would cause someone to be denied the loan based on eligibility.
Okay, great. And again, just want to remind all the attendees, especially those that have rolled in after we got started, if you have a question or you'd like us to dive a little deeper on something, whether it's for all the panelists or one panelist, drop that question in the chat, and we will do our best to work it in. The question on everybody's mind is the forgiveness portion. That's what got everyone so excited about this loan in the first place. In your opinion, each of you, what's the biggest issue or the biggest couple of issues that small businesses especially are very likely to encounter that's going to prevent or reduce the loan amount that will be forgiven? And how might they avoid that? David, you want to pick that up?
Yeah, so a lot of it has to do with when they received the funds and how quickly they brought their employees back to work. If they're doing a slow wind up, like many restaurants are having to do with 50% occupancy, they may not bring all their employees back. They wouldn't get full forgiveness based on some of their tax statements that they use to get the forgiveness of the loan. So basically, the way the law is written and the intent of the law, as I understand it, is that the government wants you to bring all of your employees back at the salaries that they were making prior to the day that you received the funds. And that's when the 8-week clock begins. So if you weren't able to bring all your employees back the day you received the funds or fairly shortly after, it's likely you may not be able to use or get full forgiveness.
Got it. Lucas, let's take it back over to you, sir. Same question. Issues that you think or see small businesses likely to encounter that's going to prevent or reduce their loan forgivability, and how you're advising them to avoid that pitfall.
Yeah, I think the last one I went over, the paperwork was pretty spelled out with 90 days. Now how much that's finally audited at the end, who will know? But the question was posed, well, I have this money, can I prepay rent for the whole year and just kind of knock that out? And so, kind of going back to what David just said, we need to use the letter of the law to kind of walk through what it's really intended for, and it's really intended to get these people back to work and to and to get your shop kind of back up and running. One was a restaurant, obviously with 50% occupancy, bringing everyone back may be problematic. But there's other things maybe that they can do to keep them on the payroll. Super deep cleaning, painting, things of that nature that you wouldn't maybe necessarily do that seem kind of weird right now since we're in a pandemic. But that's what the money's for. If not, you got to kind of talk to your CPA and maybe your banker and these guys on, well, maybe it should be a loan then, and I need to use that money differently. But that's a call that you have to sit down and kind of really figure out what's best for you.
Got it. All right, Justin, same question. Any issues that small business are very likely to encounter that are going to prevent or reduce that loan forgiveness, and how do they avoid that?
Yeah, the biggest thing, guys, you got to remember is 75% of the proceeds has to go to payroll. So that's the actual calculated number that you have to know. So if you get a loan for 100 grand, 75,000 is required to go to payroll. There's another key point that we have to know, and that is that whenever the rule and the law and the guidance says incurred and paid. In other words, the expenses, the payroll expenses have to be incurred in that 8-week period from the time you receive the funding until the 8 weeks following that, and you have to pay for that funding during that 8-week that 8-week period. So you got to remember, it's incurred and paid. 75% of the money has to go to payroll in order to get maximum forgiveness. And just one of the other caveats in there is they're counting FTEs, or full-time employees. So we've got to get a little guidance here on whether or not we're going to go for last year's numbers, first quarter of last year compared to this year. If we're going to go first quarter of this year to now, whenever your 8-week period starts. But it is a consensus from everybody I was speaking with at the higher levels that in order to be a full-time employee, you have to have greater than 30 hours per pay period. Doesn't have to be in your pay week. It doesn't have to be your typical paycheck week. So let's say you received the money today on Thursday the 7th. You need to have 30 hours for classify for that week one from 5/7 to 5/13. You need to have 30 hours or more, according to the Affordable Care Act, in order for them to be a full-time employee. So you got 3 big majors there: cost incurred and paid during the 8-week period. Money, 75% has to go to payroll for maximum forgiveness, and you have to have the right number of people. So we're looking at 30 full-time or 30 plus hours to qualify for a full-time employee and trying to replace what you had prior to this. 4 big keys there, or else if you don't pull that right, you're not gonna get maximum forgiveness.
Well, you just led me right into the next question so beautifully. So thank you for that. And I'm looking at your background, and I too want pizza now. So thanks a lot.
Yes.
That's what I'm getting for dinner tonight. I'm doing carry out. So
good.
payroll, payroll for small business owners, even if you've been doing it a while, payroll can be confusing. Even if you do it yourself sometimes, but especially the way you have to calculate it under the letter of the law for this loan. It feels like it gets extra confusing. So a question that we got at the chamber as we were preparing for this webinar was, how do employers know what payrolls to include, especially when you have that natural lag in payroll? Example given, employer runs their payroll on the 20th, money leaves their account on the 21st, so their staff get paid the 22nd. They don't include that payroll in their calculations because they didn't realize that their disbursement date was the 21st, but they didn't know that until later. So in that example, what does a business do?
So somebody's chatting. I can barely hear you, so you probably need to mute somebody down there.
Hang on 1 second. I'm gonna put everyone on mute, and then I'll take you back off of it.
All right, you should be able to hear me now. What we're dealing with goes back to that incurred and paid issue here. So let's use an example that you receive your money on the 1st of May, because when we can illustrate this with words. You receive your money on the 1st, but your payroll for the previous 2 weeks falls on the 3rd. The problem is that payroll from 2 weeks ago wasn't incurred from the time you received the money, so it's from the time you receive the money. So all that's eligible according to the rule letter of the law as of today is those first 2 days in that pay cycle. So what we've been advising our clients to do is twofold. Number one is have a separate bank account when they fund it. It's not required, but it helps us for tracking, number one. Number two, adjust your payroll to coincide with your 8-week period. So we have some clients that have chosen to go to a weekly pay period. So if they got the money on the 1st, that starts a new pay period. They pay it to the 7th. And then when they reach in week 8, they actually pay week 8 before week 8 falls out. So they can maximize the payroll during that 8-week cycle. So that's the first thing we've been telling people to do, is go to a weekly pay period. If it's too difficult because of the size of the business or your payroll provider, and my belief is no business owner should do their own payroll, personal opinion, but who your payroll provider is, then you can go to bi-weekly, but you may need to do a special paycheck when you get to the back of this deal in week number 8 to true it up or to have it incurred and paid in that 8-week cycle. I hope that answered the question.
think it did. We'll find out. I'm sure we'll hear about it after the fact if it didn't, right? All right, Lucas, let's come back over to you. You know, I'm not going to pose the same exact question that I gave to Justin, but I mean, what are you telling clients in terms of how they can calculate payroll, you know, to maximize that forgiveness, especially when they're confused about that?
Yeah, my first analogy is usually what I tell everyone is really if you're in business because you're really good at what you do. You're a great cake maker, you're a great guitar maker, you're a great cable maker, whatever that is. In this instance, unless you're a CPA, you're probably not the greatest at payroll, and that's fine. I would hire a good CPA right now. Go through it with a fine-tooth comb. It's real easy. And Julie, I'm sure you know a bunch of them. But get that done. The separate bank account is pretty key. Makes it easy just for an audit purpose to go in and out. But yeah, maybe you make the change and pay it every week. But really focus on what you're great at and bring in some people that are not great at what you do but are great at numbers. And that way you kind of maximize it if that's what you're really wanting to do, is really maximize everything you possibly can out of this deal.
Awesome. Thank you for that. David, let's bring it back over to you. Can you add anything else to that to help businesses, you know, like Lucas has said, business owners are good at what they do. They're not great at all the other stuff. But I know we have a lot of small business owners that try to do it all themselves. So how are you advising?
So I would look for free content that helps kind of make the calculation as simple as possible. So we have a PPP loan forgiveness calculator on Financially Simple. And it is a great tool. That's what I use with our clients. It's very simple to use. You just plug your payroll numbers in, you plug all of the different forgiveness factors in there, and it will calculate for you what your potential forgiveness for the loan is. So if you're going to do it yourself, get a good tool to use, and that's the tool we use, and it is available. So that's what I would suggest. That would be the simplest way to go. If you're a large organization, you already have someone doing your payroll for you. Most likely you have a CPA, and you would want to lean on those folks to get that processed for you. So that would be most desirable. But if you have to do it yourself, then get a good worksheet.
David, if you will put that in the chat, put that link in the chat to that website, I think people would love to have it. That'd be great.
We'll get that done, you bet.
That'd be awesome. Well, I'm going to take it over back to Lucas for the next question. So in preparing for this, and as over the course of the last few weeks, we've combed across tons of articles and media and stuff like that. According to Forbes, at least 10% of small businesses with under $1 million in revenue have no technology support for their accounting operations. And as the chamber, I would say that's probably pretty accurate. The issue of the 25% allowable expenses, so we've talked about the payroll portion, but these allowable expenses, things like rent, things like utilities, what are your top tips on how people can track those expenses to be forgiven? Lucas?
Yeah, we touched on it before with Justin, and we'll probably say it throughout the day, but a separate account would be key, and that way you can see those payables go through that account and that account only, and you can mark them. I don't think anyone would be overly upset about doing that and getting that set up. I think all the banks here that I've talked to, they're happy with popping one open, rushing some checks, paying some courtesy checks to get popped out, giving you some temporary debit cards. So we're all kind of community hugging one another for that sort of stuff. And then really good records in case you do get audited. So keep the cable bill, keep the utility bill, keep the water bill, stamp it, circle it, just really good numbers. If you're not going to use a CPA, and even if you are, get that to them and get it just really finite. And then when they do need it or they do audit it, it's really put together nice for the maximum forgiveness.
Awesome. Justin, let's take that question over to you. I'd love to know, clients and businesses that you encounter, what do you do when you discover that they don't have the technology support for those accounting operations like Forbes is claiming? And how are you helping clients track those allowable expenses like rent and utilities? And is there anything else besides that that can be forgiven?
Okay. First things first is I believe every small business owner should have a CPA or an accountant. Personal opinion. In fact, one of the things that we require when a client comes in is that they have an accountant, but not just somebody who's just crunching beans. We want to be a super sharp tax planner because of some things that especially we're going to deal with out of this particular issue. So first thing is I'd rather them have a planner. I think as Lucas said, we could be really good cake makers, but counting beans is really hard for some people, myself included. As far as what are some ways that you can track it, I like the idea of, because so many things are auto drafted right now and we don't get, like I got my water bill from Farragut here in Knoxville and I don't get a bill, I get an email, right? And it just automatically goes out. So I'm doing what Lucas said for my own company. I'm printing things off, keeping paper files at this point and trying to track it on my tracking sheets and having a date and a time to correlate to whenever I pay that particular bill. As far as things that are forgiven, I think that was the third part of your question. Yeah, we can. Payroll is the big one. Payroll is the Mac Daddy. Knowing how to do a payroll, you don't have to use only 75%. In fact, if you could use 80, 90, 100% of the money for payroll, it makes it so much easier. So it's not like, oh, I can only spend 75% of the total loan and payroll. But if for those of us who want to do other things, and there is up to 25% that we can use for our rent. You're not going to be able to pre-fund rent or backdate rent. Remember, it's incurred and paid during that time period. So we're only talking about 8 weeks worth of rent. If you own your building, you're going to be able to have your interest forgiven, which means you're going to need to have your amortization table from your banker or your mortgage company. You can use your utilities. Now, there's a lot of questions on utilities because in the law it actually says transportation. Does that mean that we can pay for gas if we use gas within our company? Unknown at this point. There's some guidance there, but most people are pretty clear that utilities are power, electric, things of that nature that a utility board would provide to us. There's one little caveat there in the law that is interesting, and it does say that we can actually apply the interest on loans we had in place prior to January 20th as part of the 25%. Now, it says it 2 places in the law, but it misses it in one other place. So there's a little question there on that. But in a nutshell, think about a doctor maybe bought their practice or a business that maybe had a big piece of equipment they purchased last year, and now they're making payments on it for a year or 2 or 10 or whatever. The interest on a loan, not just the mortgage, is technically eligible to be deducted as of today, or to be forgiven as of today. We're hoping, fingers crossed, we're hoping that the SBA gives us some clear guidance on that one point. But for the most part, you can count on rent, interest, utilities, interest on your mortgage, utilities, and possibly interest on loans that you had in place prior to January 20th.
Awesome. Thank you. Back to you, David. Allowable expenses.
Yeah. So, and I've had so many conversations today alone about this. So basically the intent of the bill was to get the businesses back to normal as quickly as possible. So that meant bring everybody back onto their payroll as they would normally operate. One of the suggestions that many of us made as we prepared for the unknown was to defer our expenses. So many deferred their rent. Go ahead and pay your rent. You have the money available, pay your rent. If you can, in this 8-week period, pay your rent for both months. And because you're deferring the payment, you're going to have to pay it at some point. Use this money to help pay your rent and maximize the forgiveness. So it's a very easy calculation to do. Once you have rent, utilities, and your payroll, in most cases, you're going to be able to maximize your forgiveness.
So just to briefly recap, and I want you guys to smack me virtually if I get anything wrong.
Okay.
So what I'm hearing you guys say is Number one, for tracking, for both payroll and for expenses, setting up a separate bank account. Good idea.
Yes.
Keep paper copies. I think we're out of the practice of keeping paper, so it's going to be a change for some of us. But keep paper copies. And then on the rent, David, if people had rent that was deferred, they can pay it within this 8-week period and have it forgiven.
That's correct. But, you know, and again, this is all common sense. You're going to pay let's say, for instance, you got your money the 1st of May. You're going to pay your May and June rent. You're not going to pay all of this next year's rent and the next year's rent. You're only going to pay the rent in that 8-week period. So, but yes, pay it, because that's something you're going to have to deal with later. And this is money that can be forgiven. Will it be taxed? Yes. But it's still money that is not going to have to be paid back. So that's why you want to forgive it and maximize it.
Awesome. And we, I think, are going to have some time to dig into a little bit of the tax questions if you guys are up for that task. But one last question that I had, are any potential complications to PP loan forgiveness that businesses need to watch for if they also applied for and received the EIDL loan or that cash advance that was available to them with the EIDL loan? Let's take it back over to Lucas on this one.
Julie, you're cracking up a little bit on me. I had trouble really hearing you. I apologize. Am I the only one having that, or is that across the board?
I'll try again. Can you hear me now? You hear me, Lucas?
Yes.
Okay. You were a little crackly too, so I'm not sure. If clients applied for the EIDL loan and they got the EIDL loan and then they got that cash advance, are there conflicts or complications with how they get the PP or use the PP loan? I know they can get both.
If I heard you correct, they got 2 loans.
Mm-hmm. The EIDL and the PPP.
Yeah, so you can definitely do that and have both. And I would just say go through both of those criteria and outlines as to which money needs to go into which area.
Perfect. Justin, let's take it over to you. Anything that you're seeing with clients that got the EIDL loan and the PPP loan both, including that cash advance off the EIDL?
Yeah, so if you ended up getting the cash advance or the EIDL loan, we've had a couple of people that I know that have received some significant EIDL loans, up to $200,000 over a 30-year period of time at a very low interest rate, unbelievable low interest rate. There are some conflicts there. You're not allowed to just basically use the same monies on the same exact positions, and so there's some very technical rules there. That I candidly don't have enough time to go into and try to separate that onion without visuals and everything. But here's for those who did get the $10,000 advance, but a lot of people are going to get that. That portion will be reduced from your PPP. Basically, that portion will reduce your forgiveness. So if you had a $100,000 PPP loan, you're only going to get forgiven roughly $90,000. That's a nutshell on how that works.
Okay, awesome. And I will toss this out. I know that Justin does podcasts and he does other presentations. So if you will drop it in the chat or email to me where they can watch those, where you can give them your visuals. I know I got to see a couple. I think that'd be awesome. I'd love for people to tune in and get some more explication on this. Let's go back over to David.
Yeah, so I mean, I think that's the key, you know, what Justin just said, you know, in most cases, the $10,000 grant was applied and received, and that's going to reduce the PPP loan forgiveness. You know, not to get too far off base, but on the EIDL loans, if you had the opportunity to take that loan, that is a very low interest loan for a long period of time. So if you're fortunate enough to have been offered that by the SBA, it's something that should definitely be given some strong consideration. So that's really all I have to add, in addition to what Justin already said.
I don't think it hurts to hear some of this stuff repeated, David, because it's confusing enough. I think we're all going to need to hear it a few times. So don't worry about that. We do have a question in the chat that I think might apply to several people. And of course, we're recording this webinar and we will post it later. I'm going to pitch it over to Justin. And pull the question up. So the question is, if you're self-employed with no employees on the payroll, but you still got the PPP loan, how would you suggest that you show or track that payroll when you're the only one on the payroll? Basically, you don't formally run a payroll.
Yeah. So
Justin?
The simplest answer to that is, it comes back to the calculation timing of your payroll loan. So without knowing the details, there was a change in the guidance that transpired. And you know, I got to get out to the bankers. If I could fist bump them all right now, I would, because they rocked it out for a period of 60 days. I mean, these guys and gals had just had a mess on their hands. Some people applied, the independent contractors applied before the guidance. I think it was on the 15th or the 17th of April. And the calculation was a lot higher than what the SBA ultimately came back and said the guidance should be. And so some self-employed sole proprietors with no employees got a lot of money. And then after the guidance came out, they didn't get as much money. And if you kind of keep it super simple, you really can't pay yourself any more than about $15,000 over an 8-week period. That's the super simple way to calculate it. You say, well, I got a $100,000 loan because I know somebody did that. Unfortunately, the way the guidance is, it looks like you're only going to get forgiven about $15,000. So you may want to set the surplus back. You say I only got a 10 grand loan because it was 2.5 times my line 17 of my Schedule C. Then once again, you can calculate pretty much not to go above $15,000 over an 8-week period. Okay, it just depends on the timing of when you applied and what you were funded before or after the guidance came out.
All right, I'm gonna let David and Lucas, if either one of you wants to add to that, feel free to speak up.
Yeah, the only big thing I would add to that is, you know, if you're making X last year, you don't want to make, you know, Y this year during that 8-week period. So if you're a sole proprietor, you can put a case together that says, hey, I made $20,000 in January. Okay, that could probably make sense, and we can probably get that through. But if you're getting, like Justin said, $100,000 and your annual salary is $100,000, that's going to turn into a loan. The only thing that I would say is, it's from a banking perspective, maybe minus a student loan, it's the best loan you could possibly get right now. Unless you're Ruth Chris, I wouldn't send the money back. I would keep the money, keep the loan, and see when is it unthawing from this economy. And see what happens. Maybe you have a bunch of money and you don't need it, and all the clients come back and everything's great. Yeah, then pay off that loan. But it's 1%. I would probably hold on to it and keep it as a loan until you think you're really through the woods and everyone has come back and everyone's buying what you're selling and your services.
I think what I would add to all of this is that, you know, from an operational standpoint, I mean, obviously, if you're a sole proprietor, or you're the only person on the payroll, and you set up a separate PP loan account, which I think is really important in this particular situation. Pay yourself out of that account. Pay yourself. You can pay yourself, you know, $15,000 divided by 8 per week, or you can pay yourself monthly. But as Justin said, it can't exceed $15,000 over an 8-week period. But when you're writing that check, just write on there, what's the purpose? It's an owner's draw. Write owner's draw on there. And it's just a very simple way to keep track of the funds. The same thing with utilities. If you're a small business and you have, you know, not a lot of bills, and you typically write checks for utilities, write checks out of the PPP account. It's just a simpler way to do that. In organizations that are larger, you know, obviously they're going to have automatic withdrawals set up and payroll services, and and things like that. So it doesn't have to be difficult. Just don't pay yourself too much.
Got it. All right. We have another question in the chat that I think probably applies to several businesses that we are connected to. Complete forgiveness doesn't work for my business. For example, we aren't reopening until June. We've already received our PPP loan. Are there any strategies for maximizing forgiveness there? I will let you guys fight over it. Whoever wants to speak up first.
I mean, I'll go first. I think we already said some of it. You can bring them back. I mean, whether you're opening for the public is one thing, but if you want to keep your guys working, keep your guys working. They could probably do stuff without being, over 10 people or however you're comfortable with. I've seen a lot of places, they've got paint jobs, they've got big renos that they've done that probably didn't cost a ton of money, but you've got a lot of labor sitting out there. It may be a good time to get them back on the books and have them do some stuff. And they'll probably be very thankful for it. From the other end of the banking end, unemployment is pretty tough and it's a long time to get. And so they'd be probably really thankful to come back and do something, even though that's not, quote unquote, their job description.
Yeah, and I would add that it's to your advantage to bring them back as soon as possible so that you can retain your good employees. As people are sitting out here on unemployment, they're looking for different opportunities that might be out there, and other companies are in the same boat that you're in. So.
Yeah, the only thing I would say is just throw a slightly different caveat to that. I don't know, Brandon, I don't know y'all business or what exactly it is, but there are several businesses currently that still can't operate because of guidelines. But what's happening from a macro perspective is there's back pressure. Remember, it's not that the economy had trouble here, folks. We shut demand off, right, to protect us. So we shut demand, which means that more than likely, Brandon, you had clientele, whatever the service is, that were in back pressure that you should have been servicing during this time period, that they're building up pressure to flow through your throughput of your operations, meaning that when you can open that building back up or your operations back up, more than likely are not going to be working the 9 to 5, whatever it may be. You may now have 10 6s or 6 10s. So what you could do theoretically is come in and bring your team back in a week or two early, get them ramped up to push that throughput, push that clientele, that service, and that product, whatever it is, through your business. Also knowing that even though they work, now they may be working 70 hours in a very compressed time frame. So there's nothing in the guidelines that say we can't pay them more than what they were earning beforehand. And in fact, a lot of people are going to have to, especially in that particular circumstance. So it's a tough one, brother. I get it. I hear it a lot, especially with the entrepreneurs who are mandatory shutdown still. But there are some strategies you can use that can help maximize that forgiveness in that area by helping compress time, flow, and everything of that nature.
Awesome. And I know I saw this answered in the chat, but some people might not have gotten to see it, and it could apply. Megan asked a question that they were fortunate to get a PPP loan. Since they received it, they hired new staff who were not with them before they applied. And she was wondering if her payroll counted for the new staff as well. And would that be the case? And Justin, you answered that yes, it would. Is there anything else to add to that?
Right now we have, almost 30 million Americans unemployed. It's a great time for us business owners to go out and pick the cream of the crop to bring them in our business and cut the loose ones off our business, right? So there's nothing that says we have to bring the exact same people in. The idea is to get America back to work. That's the whole guidance behind the loan, behind the CARES Act. So that being said, they're really not looking at the names of the people. They're looking at the number of people that you had and if they're full-time or not. And they're looking at the wages you paid over which period you fall into. And all you're trying to do is just make sure you have the number of people higher or equal to what you had prior, and that the wages are equal or higher to help maximum forgiveness. So, if you had Sally and now you want to hire Fred, then you can do that in that particular position.
And that's why I say that it's really important for you to bring your employees back just as soon as possible.
Absolutely. All right. Well, we've got some time left. Let's wrap it up with that most favorite of topics that we all know and love. Let's talk a little about the tax impact. because once we do get back to normal, and we will get back to some kind of normal, there will be taxes come next year. So I don't have a formalized question for you guys on that, but as a layperson myself, I do know that the tax impact is a fluid situation, it seems, as this program continues to evolve. So whatever any of you are telling clients or advising them to help them prepare for the tax impact next year, I'd love for you to share it.
I'll start off with this because I actually documented this on the. I don't give myself that many attaboys in my life. This is one of my attaboys. So I'm like, yes, I got one. When I read the law, line by line, took my little pink highlighter, got to the point where it said loans going to be forgiven. So we know that if we have debts forgiven, it becomes income taxable to us. That's a fact. But in this particular case, it said, hey, whenever we forgive the loan, it's not going to be income taxable to you. The forgiveness is not going to be taxable. I'm like, great. But what about, and I'm a nerd, what about Section 263 of the Internal Revenue Code? I started asking CPAs, and they're like, I don't have a clue what you're talking about. Inside Section 263 of the Internal Revenue Code, it actually says, not to try to bore you, but this is like really fun stuff for me. It says that if you have free money or forgiving money, that you're not going to be able to actually double dip. You can't use $100,000, let's say $100,000 to pay payroll and then claim that payroll as a deduction on this year's tax returns. The IRS actually came out last Thursday and gave guidance. I think it was 1120. I think it's the guidance number on that says, no, you're not going to be able to double dip. So in effect, what happens is only really about 50 to 60% of the PPP money is truly free. The danger that we have as business owners, and this is where I get jazzed up with what we do working with business owners, is if I typically made $100,000 NOI or net operating income or profit in my business, and I had a loan for $100,000 that got fully forgiven, realize that if all things being equal, when it comes time for tax bill, you now have $200,000 in adjusted gross income, which means that your tax bill just went up a couple of brackets and you don't have the cash to pay the tax bill because you gave it to your employees and everything else. We actually call it phantom income in our world. So the danger that I'm looking at through my lenses as the team here, the colleagues in our company are helping the business owner to maximize forgiveness, I'm already looking in with the tax side of the company saying, how in the world are we going to keep these business owners from basically coming up with an extra $50, $60, $100,000 in some case? Imagine if you're a business owner, got $4 million on PPP, and now you got a $2 million tax bill and you gave it all to the employees. So we're actually working on strategies right now for our clients, no matter the size of the loan, that's going to help minimize their tax liability. We're working with our tax advisors, the client's tax advisors to help in that area. So I'm going to tell you guys that even though it's free money, nothing in life is free. And the IRS is already out there with their hands out, and they're going to get roughly about 30 to 50% of the money we got in the PPP back. And if you're not aware of that, like the old G.I. Joe saying, knowing is half the battle, you're going to have some problems come next year unless you start planning for it now. So that's the big tax monkey that not many people are talking about it. And now it's just now hitting mainstream. And we've been talking about it now for 60 days, ever since the law came out. So something you might want to be aware of.
Yeah, and I think from just a practical standpoint, one of the suggestions I'm making to all of our businesses, and I think it's just a good business practice in general, is outside of your operating fund, set aside a tax fund where you're putting aside monies that you and your tax advisor are estimating that you're going to owe, and go ahead and set it aside now. So for instance, if you don't use up all of the forgiveness money, you could take the remainder of that and slide it into that account knowing that you're going to pay tax on what was forgiven. So that's one strategy of many that you could use in that particular incident.
I'll play the other side of the coin because I think every business is a little bit different. I think what these guys said is exactly right. That's for a forgivable loan. Maybe you don't forgive it.
Yeah.
Maybe you keep it at 1% and you do other things with that money. You pay off other things. You use that money and you say, I'm going to take that as a loan. It's the world's best loan. I'm going to pay payroll through another means. I'm going to do this with this money. I'm going to keep this loan on the books. It does something different, and you're going to get hit with it being not forgiven. But from a strategic point of view, of maybe not knowing or hoarding cash, it may be better for you. Everyone's different. Everyone has different strategies. Before you go off, kind of like Yosemite Sam in the cartoons, get good people around you. You're great at what you do, but get a good CPA, get these guys, get a good banker around you to say, hey, what do I need to look like in 2 or 3 years even, or at the end of this year on my taxes and things of that nature, to figure out what's the best strategy for this money. I know everyone wants a free loan, everyone wants it forgiven, but there's a couple of different ways you can look at that and figure out what's best for you and your company and your family.
If I could continue on what Lucas is saying, just one little caveat, friends, as we deal with this, is that we're only talking about 40 pages out of an 800-page document, an 800-page law that passed. Only about 40 pages is PPP. There are a ton of tax advantages here. If you take what Lucas just said and you don't forgive it, then now you bring up the payroll credit that could end up being far more impactful for you and your company than the forgivable PPP position. So there are a lot of different moving parts here. If you don't have rock star tax advisors, man, this is the one that now you got to have rock stars in your life to help you through this. Okay.
Yeah, absolutely. I think you guys are completely on point. Again, we deal with a lot of small businesses. It is our joy to serve those guys. And we've all got that, DIY spirit, and we respect that. But now's the time to ask for help, for sure, and not be ashamed of it whatsoever. Well, guys, you have done great. I don't see any extra questions in the chat right now. So if you guys have them, please go ahead and drop them in there. And without seeing those, unless they pop up, I want you guys to share some final thoughts. Anything we haven't covered. One question I might have for you, Lucas, is if people didn't get in on the first wave of funding, and they're still hoping to get some of that money that's left, there's a little bit left, are there banks that are still processing and lending?
Yeah, I can certainly plug my bank. We're still doing it. So we're happy to do it. Our website is really easy. It's htb.com. So Home Trust Bank. You can get it in, get your paperwork together, but get it in. I think United Community is doing it. This isn't a situation where we're actively going after them, or we're different from another bank. I would say if you can get it in, get in line. I mean, you never know. Politics is very fluid right now, and there's elections happening. Who knows? It may get funded for another third round. I would at least get in line, and that way maybe you get it, and then maybe you're not, but at least you tried. But that would be my thing. And if you can get it in here at htb.com, you can get it at United Community, do that. If you can get it in another bank, do that. But get in line at a couple places, and it may get pushed through. What we're experiencing as banks is, imagine if everyone in the country went out and put a mortgage application in to buy a house now, this second. So every bank doesn't have the ability to process all of that at one time. No bank does, small, medium, large. So if you can get your application at a couple of places, you could get lucky. Bankers' hours are kind of out the window. No one's on the golf course. There's a lot of them working 20 hours. So yeah, I would get it in and try to do it.
And I will make a quick plug, Lucas. First Horizon Bank, on our board of directors, I know I got word today that they are still available and processing. So there's another option, but thank you for throwing those others out there. Yeah, you guys are doing a phenomenal job, community. Phenomenal.
Yeah, I would say it's a community effort. It's 100%. We're not looking for market share. We're not trying to get somebody out. It's a community effort. Put it in at several places, and I think every banker will tell you that. And every banker will help you with the paperwork, even if they're not eligible to even put that application in for you. Your banker may even help you, even if they're not SBA qualified.
Justin, David, any final thoughts? Anything else to throw in there that we didn't cover? I know there's still a lot.
Yeah, what I would say is, if you have a banker, go buy them a pizza. If I want pizza, go buy them a pizza and give them a hug right now, because bankers have rocked it out. They have been working. I know bankers have been doing 24 hours a day nonstop, and it's unbelievable to see over 4 million loans processed nationwide right now in less than 30 days. That's amazing. Okay. unbelievable. So if you have a banker, go love on them. Give them a hug, give them a pizza, do something to love on them. The second thing I'm going to tell you is everything we talked about today could change tomorrow. It's crazy. It's like the Wild West, okay? I'm not trying to be mean here, but the SBA could come out. The law allows the SBA to have guidance and do whatever they want to do. So you got to stay tuned to what's happening. This is some really good information, but there could be some material changes tomorrow that they say, you know what? We changed our mind. And now we're going to have to pivot and swing in this. So I'm going to tell you to talk to your advisors, your tax advisor, your business advisors. You make sure you're in the loop with them and stay tuned, because who knows what's going to happen tomorrow. It's been that way for the last 45 days. And I feel like a termite and a yo-yo sometimes over here, but we're going to get to it.
So I think my final parting gift here would be that, make sure that you always pay attention to who you surround yourself with and the advice that you get. Now is an important time to have very good advisors, but at the same time, that's true in all things. And I would say that, stay positive. I know that it's easy to get down right now, but we're going to get through this together as a community. And we are going to have much brighter days ahead. So sometimes it's best just to turn off the news, go outside, breathe some fresh air, and listen, stay tuned to these types of information, because this is good information. It does keep you up to date. Listening to the national news is not going to give you the information you need to be able to make business decisions. So anyway, I think you already know that. I hope you all are doing well and stay well.
Well, on behalf of the Chamber of Commerce, I want to thank each of you so much. Lucas and David and Justin, I want everyone here to know the speed with which we put this together was like a termite and a yo-yo?
Right, a yo-yo, absolutely.
I'm stealing that, and there might be a cartoon coming your way. I don't know. So, really give kudos to these members. Definitely thank the bankers out there. Thank the financial advisors, but also thank the bankers. Lucas's bank is across from the Ingalls and Farragut. So if someone wants to stop by, we'll go buy him some beer and drop it off as a thank you. But yeah.
Beer works.
Okay. Good. I'm glad. Well, we will send the packet out to our member attendees after this is over. We will share the contact information of these panelists. I thank you again. We will watch this as it evolves. And guys, we might be in touch. And if you're up for a part 2, I'd love it.
Sounds great.
All right. Have a great rest of your day. Finish it out strong. Go home, love on your family, and we'll see you soon. Take care.
Bye all.